Right now, SpaceX stock is crashing back to where it started, and almost nobody is talking about the real reason why. This is the biggest IPO in Wall Street history. It made Elon Musk the first trillionaire on paper, and it is quickly becoming one of the most controversial stocks of the decade. Today I'm going to walk you through three things. 1. The actual mechanical reason this stock exploded and then collapsed, and it is not the reason you're being told on financial news. 2. The specific date coming up in the next few weeks that could decide whether this stock rips higher or falls off a cliff. And 3. Whether the long-term bull case still holds up once you strip away all the hype. Stick around, because by the end of this video you're going to understand this stock better than 90% of the people currently trading it. Here's the thing that makes this stock genuinely wild right now. Depending on how the next month plays out, this could be a once-in-a-generation entry point, or it could be the start of a much deeper unwind that catches a lot of retail investors off guard. We flagged the float mechanics on this stock months before the IPO even happened, and everything we said would happen has basically played out on schedule. So let's get straight into exactly what's coming next before it happens, not after. Okay, let's get everyone on the same page. SpaceX priced its IPO at $135 a share on June 11th, raising close to $86 billion once the underwriters exercised their extra allotment. That made it the single largest IPO in stock market history, bigger than Saudi Aramco, bigger than anything Wall Street had ever seen. When the stock actually opened for trading on June 12th, it opened around 150, and by the end of that first session it had closed near 161, up about 19% on day one alone. From there it kept climbing, eventually touching a high in the neighborhood of $225 a share within the first week, which pushed SpaceX's market cap past $2.5 trillion, and briefly made it the sixth most valuable public company in America. And then it turned. Over the following weeks, the stock gave back almost all of that gain, and as of today, it's trading right back around $136, basically flat with where it started. So what the heck is happening? Here's the real reason, and it has almost nothing to do with the narrative you're hearing about AI hype cooling off or rocket launch delays. It's float. When SpaceX went public, the company only sold about 555 million shares into the market, and with the over-allotment included, that's still less than 5% of the roughly 13 billion total shares outstanding. The other 95%, the shares held by Elon Musk, early venture investors, and employees, is locked up and legally can't be sold yet. That means the entire $2 trillion plus valuation swing you watched happen in the first 2 weeks was being driven by a tiny sliver of tradable stock. Let me say that a different way so it really sinks in. The stock didn't go up because millions of investors decided SpaceX was suddenly worth $2.5 trillion. It went up because a massive wave of demand, retail traders, index funds, hedge funds, was all fighting over a tiny pool of available shares. And it didn't come down because the business got worse. It came down because that same imbalance started correcting itself as more information hit the market, and the initial euphoria faded. Here's why this matters going forward. And this is the part almost nobody is watching closely enough. SpaceX structured its lockup completely differently from a normal IPO. Instead of one single wall of shares unlocking after the standard 180 days, they staggered it into 16 separate release dates. The first big one is tied to the company's very first earnings report as a public company, expected around August 6th. On that date, roughly 20% of the locked insider shares become eligible to sell. There's also a separate trigger, an extra 10% unlock, but only if the stock is trading at least 30% of the IPO price, meaning above $175.50, into that earnings date. After that first release, smaller 7% tranches roll out roughly every few weeks through August, September, and October, then a bigger chunk unlocks around the third quarter earnings report, and the entire 180-day lockup fully clears on December 8th. And Musk's own stake, about 6.4 billion shares, roughly 42% of the company, stays locked until June of next year. Back before the IPO, I had projected that the real test for this stock wouldn't be the debut, it would be the first earnings report, because that's the moment supply and fundamental styles collide with the first. That date is now about 3 weeks away. Now I want to be fair here because it's easy to make this sound purely bearish, and that's not the full picture. Just because 20% of insider shares become eligible to sell doesn't mean they will. Musk himself hasn't signaled any intention to sell a single share, and his interests are obviously tied to the long-term value of the company, not a quick cash out. Plenty of early employees and venture backers may also choose to hold, especially if the earnings report is strong. A lot of people told me back in June that this staggered lockup structure was just financial engineering theater and wouldn't actually matter. At this point, watching how closely the stock has tracked every single one of these dates, you'd be pretty shocked if the August 6th report doesn't move this stock significantly in one direction or the other. So let's talk about what's actually spooking the market right now, because there are three specific things layering on top of the float story. Number one, the bond sale. Less than 2 weeks after the IPO, SpaceX went to the debt markets and raised $25 billion in senior unsecured notes after seeing almost $90 billion in investor demand. The reason behind it is legitimate. They're paying off a bridge loan and funding AI infrastructure build-out rather than diluting shareholders with more stock. But optically, raising that much debt only weeks after raising $86 billion in equity made a lot of investors nervous about just how much cash this company is actually burning through on AI and rocket development at the same time. Number two, the ESG downgrade. MSCI assigned SpaceX its lowest possible ESG rating, a CCC, citing concerns about how the company manages environmental, social, and governance risk. For a company this size, that kind of rating can quietly push out large institutional funds that have mandates against holding low ESG names, and that's a real structural headwind on demand, even if it has nothing to do with rockets or revenue. Number three, the sheer size of the debt load relative to the business. SpaceX's only consistently profitable segment right now is Starlink, and the company has accumulated more than $41 billion in losses since it was founded back in 2002. Layering $25 billion in new bonds on top of that, funding a business that's still spending aggressively on AI compute, on Starship development, and on data center build-out, is exactly the kind of thing that makes bond investors price in more risk than equity investors initially did. Each of these three things is individually explainable, but stacked together in the span of about 3 weeks, they help explain why the stock gave back almost all of its post-IPO gains. So what's the long-term picture here? Because I don't want you walking away from this video thinking this is just a story about a stock falling apart. There are three real pillars to the long-term bull case, and they matter a lot more than the next 90 days of lockup noise. Number one, the rocket business itself. SpaceX still dominates global launch. Falcon 9 remains the most reliable, most reused rocket on the planet, and that launch cadence is the infrastructure everything else in the company is built on top of. Number two, Starlink. This is the profit engine. Subscriber counts have roughly doubled year over year, crossing 10 million subscribers across more than 160 countries, and it's the one segment of this business that's consistently generating real cash flow rather than burning it. Number three, and this is the part that's genuinely different from any previous space company, the AI angle. After folding xAI into the business earlier this year, SpaceX is now sitting on massive compute contracts, including a deal with Anthropic worth $1.5 billion a month for access to data center capacity, and a similar arrangement with Google, that turns SpaceX from a pure aerospace bet into something closer to a three-engine company: rockets, satellite internet, and AI infrastructure, all sharing the same balance sheet. If you zoom out and think about other companies that had brutal post-IPO drops, Amazon lost the vast majority of its value after the dot-com bubble burst, and obviously came back stronger than anyone imagined. Meta, back when it was Facebook, dropped more than 50% in the months after its IPO before eventually becoming one of the most valuable companies on Earth. A rough first few months of trading, especially for a stock with this kind of artificially thin float, doesn't automatically tell you anything about where the business is in 5 or 10 years. So here's exactly what I'm personally watching over the next month. First, the August 6th earnings report, since that's the trigger for the first big lockup release and the first real financial report card this company has given as a public entity. Second, whether the stock is trading above that $175.50 threshold heading into that date, since that decides whether an extra 10% of shares unlock early. Third, insider selling behavior once shares actually become eligible, because that tells you a lot more than the headlines do. And fourth, how the bond market continues to price SpaceX's debt, since credit spreads widening further would be an early signal that something's off before it shows up in the stock price. I'll be covering all of this as it develops. Now I want to hear from you. Do you think this stock is a long-term buy at these levels? Or do you think the lockup unlocks are going to keep pressuring it lower through the rest of the year? Drop your take in the comments. Alright, that caps off today's video. We covered the float mechanic, the lockup calendar, the three things spooking the market short term, and the long-term case that's still very much intact underneath all the noise. Make sure you're subscribed so you don't miss the August 6th breakdown when it happens, and we'll see you in the next one.